10-day simple moving average, also known as the 10 DMA. The 10 DMA is used as a constantly moving level of support and resistance, similar to the 200-day moving average on a daily chart or the 100-day moving average on a daily chart, simply used as support and resistance to the market. The 10 DMA should be periodized for each time frame specifically, and what that means is that the 10 DMA will show on each separate time frame, whether it's the 15-minute, the 1 hour, the 2 hour, 4 hour, the 10 DMA will show the same price on each time frame when it's periodized accordingly. A 10-day moving average setting means that a period of 10 is input on a daily chart, and the position of the 10-day moving average would reflect at a very specific price level on the daily chart. And to view the same price level on smaller time frames, it'll simply give you a more magnified view, and the moving average has to be periodized to reflect the same price on the higher the daily chart, and it will be properly periodized on all time frames, again to reflect the same price level on the smaller front time frames, and we're going to show you how to do that here. This is a list of the 10-day moving average period levels. So when you pull up a daily chart and you input the simple moving average in the daily chart, you would put in a period of 10. When inputting your simple moving average on the 4-hour chart, you put in a period of 60. How many 4-hour periods exist in a 24-hour period or in one day? 6, right? So we use the period of 60. On a 2-hour chart, how many 2-hour periods occur in a day? 12. So the period that we input is 120. And so on. 24 1-hour periods, a period of 240 on the 1-hour chart. 480 and 960 for the 15-minute chart. Just to give you a bit of an example here. To be clear, I don't usually put the 10-day moving average on the daily chart because it moves too close to the market, and because I've got other tools applied on my daily chart, I just don't need another line in there to confuse things since it's so tight to the market. Rather, on the 4-hour chart, it will separate itself fairly distinctly, and I will put the 10-day moving average on the 4-hour chart. So in this picture we see the daily chart, the 4-hour, the 60-minute, and the 15-minute, and we see it's taken, this snapshot is taken on each of these time frames on the exact same day. And what I want to show you here is that the price on the daily chart, the price on the 4-hour chart, the price on the 1-hour chart, and the price on the 15-minute chart will all reflect the same value. Here on the Euro-US dollar, each of the indicators are showing a price of 120.80 for the location of the 10 DMA. 15-minute chart, 120.80. 60-minute chart, 120.80. 4-hour chart, 120.80. The daily chart, 120.80. How this comes in handy is when you're scrolling through your charts throughout the day or throughout the trading session, then you don't need to keep flipping back and forth to see where your 10-day moving average is on the various time frames. It's actually right there in front of you, so that when you magnify your view, you can see exactly where it is relative to current price action on the smaller time frames. Let's just look at some examples as to how we're going to use it as a trading tool. It's a moving level of resistance and support. We use it as a reference similar to other clearly identified levels of resistance and support, like resistance and support, Fibonacci's, pivot points, and so forth. An area at which the market could bounce or respond. These types of moving averages, the simple moving averages, they're really not useful in consolidation and tight ranging markets, because the moving average will typically move right through price. Some samples of the 10-day moving average. Here we see 10-day moving average on this 15-minute chart. We see it offering a base of support to this consolidation, and here the central pivot, and then price moves through. As we see the 10-day moving average on this 60-minute chart is moving downward, we see that there's a head and shoulders forming right at the 10-day moving average, which would further support trading this head and shoulders, or selling this head and shoulders, as it just offers one more technical factor suggesting that price will continue to move down by this rejection at the average. Here's our head and shoulders and the fall. A closer look at the head and shoulders formation. Also, this level up here of 122.70.75 was a very distinct level in history. MACD forming, MACD divergence on the 15-minute chart. On this 60-minute chart, we see a nice downtrend, and then when the trend meets up with the 10-day moving average, we see the market establish a level of support here and consolidation before continuing its move through. This is a Euro 60-minute chart, and here we see a nice move on the range and a big intraday move, and price stops quite clearly at the 10-day moving average. Price comes back up, tests the backside of the moving average, and then falls. Price has a key reversal day here, rallies to the 10-day moving average and stalls. Also this level of resistance, of course, and then pulls back to this level of resistance before continuing up, retraces to the 10-day moving average, retraces to 10-day moving average, and up. Now when you pull up the 10-day moving average on your charts at home and start to look through to test this, it's kind of more ideal if you test it on the 15-minute chart, because often we'll see this. We'll see price come down here, move through the 10-day moving average, but this is simply a closed 1-hour candle. On the shorter time frame, we might have seen a really nice bounce here before price continued through and closed the candle. We also will often see the 10-day moving average moving through a reversal formation, as we see it does here. This is a very nice reversal formation. Price moving through the 10-day moving average, and then the 10-day moving average capping resistance here. The consolidation. Looking at it from a longer time frame perspective, this is a 4-hour chart, and we see that the 10-day moving average provides resistance to the market as it trends down. Likewise, as the market trends up, we see 10-day moving average offering support to the market as it trends up. Here it gives us a head fake, but then moves back above the moving average and offers support. The market remained above the 10-day moving average with the one exception for a full 1,000 pips. You could trail a stop below this moving average if you like. Again, here we see the 10-day moving average defining a reversal formation here, and then defining a reversal formation or confirming a reversal formation up here. Left shoulder, head, right shoulder, fall. And here we see several defined reversals laid out for us. Again, the 10-day moving average clearly defining price breaking points, and in this case a reversal. Price rallies, falls, bounces at the 10-day moving average, nice retracement, about 79%, and then we move through and we bounce, and then we finally get through, and then when it finally gets through here, then we see a really very aggressive trend to follow. Your greatest challenge are your controlling desires, and your greatest asset to your trading will be discipline. This is me again in a bobsled. This is on the Calgary track, my home track, and we had a lot of success there. And this is a corner that just comes off the fastest section of the track, where we achieve just over 130 kilometers on this track. It's not a real fast track, but this corner goes a full 270 degrees, this corner all the way around, and we're suspended on this corner for a full 270 degree loop.